All right, welcome to the Sushi Onsen AMA, where we host projects that have partnered through the Onsen program and give them a platform to reach a larger audience. Today we have Raphael Kosman and Hal Hyatt with TrueFi. Thanks for coming out to the sushi community, guys.
Thanks, our pleasure. And by the way, do you go by Magic Turtle?
Yes, yeah. Magic Turtle, you know.
Okay. All right, great. It's great to be here. Thanks for having us on.
Yeah, awesome. So, just to get started, do you want to sort of give a broad, brief sort of on what TrueFi is for somebody who may not have any context?
Sure. I'll kick it off and then I'll give it over to you, Hal.
Sure.
So basically, I imagine most of you are already in DeFi, and some folks here are probably pretty deep into DeFi. So as you may know, a lot of DeFi is powered by over-collateralized lending. That's what Compound does, that's what Aave does, that's what Maker does, and it's a great model. It works for a lot of things. The idea is you put up $1.50 of Ether. With Compound, you can borrow $1 of stablecoin. Or you put up $1.50 of stablecoin, you can borrow $1 of Ether. You're always putting up more collateral than you're borrowing. And that's a good model because it lets the protocol protect itself. If someone doesn't repay the loan, they can just liquidate the collateral. And so then these protocols, they don't do any vetting of the borrower. They allow anyone to borrow. Any Ethereum address can borrow from these protocols. And they don't care if you don't pay it back because they've got your collateral and they can just liquidate it. Okay, so that's a lot of where DeFi is at today. Now, when we looked at this, we said, okay, that's a big market. It's growing. It's very important. But there is an even larger market, which is being able to do lending on credit. And that's the way that most lending works in traditional finance. And we think it is an important thing to be able to bring to DeFi, but it is very challenging to figure out how to do that in a decentralized way in a truly DeFi protocol. So that's why we designed TrueFi. The TrueFi, anyone can take stablecoin, put it into the protocol, into the lending pool, and then community vetted borrowers can connect to the protocol and can take out loans anywhere from $10,000 to $10 million. And these borrowers are all vetted by the community. Their loans have to get approved by True holders. True is the governance token of the protocol. And they pay a very attractive interest rate, oftentimes 16, maybe even 18% back to the protocol. And that goes mostly to lenders and also a certain amount to the protocol in the form of fees that are earned by True holders. So that's overall what we're doing. We think it's a very important part of the future of DeFi, and that DeFi in the future is going to have exchanges like SushiSwap. It's going to have over-collateralized lending protocols like Compound Aave, and it's going to have uncollateralized lending, which is really what we're targeting. And that's going to be another important building block in the total financial stack that we're building. So that's a high-level overview. Hal, let me give it over to you and ask if there's anything you'd like to add there.
Yeah, I'll introduce myself quickly. I'm Hal. I'm the lead smart contracts engineer at Trust Token. I love Solidity development, and I love working in the Ethereum space to solve interesting financial problems. Yeah, sort of when we started TrueFi, when we launched it, the way that we actually approve uncollateralized loans is very discreet. It's still currently relatively discreet, where literally true holders who form a majority can approve borrowers to actually withdraw funds. What we're currently working on is taking that to the next level, as opposed to having loans be discreetly approved by true holders. We actually are coming up with a model which allows for lines of credit to be established and allow borrowers to borrow on an open term basis. And in addition to that, we're adding multiple assets. Currently, we only support TrueUSD, but our goal is to become sort of the one-stop shop for actually exposing yourself to this sort of lending. So our plan is to, in the next month, add other stable coins such as Tether, DAI, and USDC in hopes that borrowers who are interested in directly borrowing these sorts of assets will now have the opportunity to borrow, and lenders who hold those tokens can directly deposit it into one of our liquidity pools.
Well said. And Hal, I realized I didn't introduce myself either. I'm Raphael, and I'm the CEO of Trust Token. All right, so Magic Turtle, that is, I think, a pretty good intro.
Gotcha. Yeah, perfect. So, and also I'll just say this for everybody listening in. This is a totally open AMA, so you're free at any time to raise your hand, and I'll try to bring you up here to ask your question if you've got any questions. But for the for TrustFi, what sort of I'm just sort of curious. This is sort of a weird question, but like long term, what sort of rates do you think uncollateralized loans might go for? Because like I was thinking long term, all of the DeFi stuff is probably going to trend towards like, I don't know, 3%, 4%, 5%, like something like that. But for uncollateralized loans, for like credit and lending stuff like that, more business applications, I'm unsure sort of what that uh, market is like.
Yeah,
I can answer
Hal,
this.
any thoughts on that?
So the way that I sort of look at it is a lot of the rates in DeFi are currently unsustainable as supported by yield farming. So one of our goals when building this protocol was in the long term to try to beat rates without yield farming. So what we've been seeing is the range of loans we've been able to approve have been between like 14 and 19%. And this is without any additional token incentives given to liquidity providers. So our hopes are that in the long term, 3, 5, 7 years, that we'll actually be able to offer very competitive rates without having to use token incentives. And I think fundamentally, that's what makes TrueFi a good product, is that we can do it without supplementing the APY that people are getting.
That's right. And we do expect over the long term, as we onboard more borrowers, we'll be getting these high rates, but we will also have some steady rate of defaults. Like no lender has no defaults. And we just need to make sure that even when you take into account the defaults, the rates are still pretty good.
Yeah, if the default rate is 1 or 2 out of 100 loans, you're still getting a really good rate. And the longer that you actually hold our LP tokens, the less you're exposed to short-term risk of defaults.
Yeah, so let's get into how the defaults would happen then. So it's well, maybe let's walk it back and sort of go through the full process. So like, say a business wants to take out a loan from TrueFi, what is the process there for that organization to become sort of whitelisted, I guess?
Yeah, so first they will submit an application on our forum saying, here's who we are, here's information about what we're looking to do with the funds, here's the history of our firm, and so on. And most of our borrowers so far are large trading firms like Alameda, Invictus, Nibio, etc., often that have hundreds of millions, some even billions under management already. And there's usually community discussion about them, and they also work with our team to do a financial review where we get on with them, and we have someone on our team who's kind of like our head of credit, and will go and look at their exchange accounts, etc., and make sure that we feel comfortable from a credit perspective extending them a loan. So once they've gone through that, then they'll get approved by the community. Assuming that they seem very legit, they'll get approved by the community up to a certain credit limit. So let's say Magic Turtle, let's say you got on board with a credit limit of let's say $2 million. So then you'll submit, once you've been approved, you'll now submit your actual first application for a loan. So you'll then actually submit directly to the protocol on chain saying, hey, I want $2 million at 15% APY for 60 days. And then true holders will vote on that. And assuming it gets enough votes in favor, then the money will you'll be able to just call a function in the smart contract, and the money will go directly from the lending pool directly to your address. You then trade it, provide liquidity, and so on. Make money for 60 days, and then before that 60-day mark hits, you have to pay that back with the interest included. Once you pay it back, it goes back into the lending pool to be borrowed out by another borrower or withdrawn by the LPs that ultimately put money into the lending pool. And that's basically the process. Hal, anything you'd add there?
Oh, sorry, I don't want to cut off Hal. Go ahead.
That's about right. Yeah. Basically, the sort of mechanical way is we currently have a whitelist of addresses that that people can borrow, that borrowers can borrow from, and we try to leverage our community and leverage Snapshot as well as our forum to sort of crowdsource the approval of these addresses. And then once the addresses are approved, we know, we require proof that the person we're borrowing or lending to owns that address. And then once they have their address approved, they can start applying for discrete loans.
That's right. And I would mention that in order to get on that whitelist and be a borrower on the platform, every borrower does have to go through a KYC with us, where our team has reviewed, our compliance team has reviewed all the documents for their entity, the people involved, and so on. So we know that they are who they say they are, and they're not misrepresenting themselves to the community. And also, they do have to sign a legally binding loan agreement with our company. And right now, our company is the counterparty to that, but we're right now setting up a foundation, which is going to be the counterparty for that going forward. Because, right now, a loan agreement between a smart contract, a DAO, and a firm, that's not necessarily enforceable in court. So we make sure that every loan that happens on our platform, at least for now, until the laws catch up, it is considered to be from a legal perspective, a loan between our company and this counterparty, such that if they were to default, our company can go pursue them in court. And so it's a very similar, from a legal perspective, it's similar to if Celsius or BlockFi or another company was doing an uncollateralized loan. Someone can certainly default on that, but you can enforce that in court. It's a very standard sort of loan agreement.
Gotcha. So basically, the company TrueFi only creates lending agreements once it's passed, like the voting process with the token holders. Is that sort of how it works?
I don't know, how do we do that in parallel or after? But you only get on the whitelist once you've checked all of these boxes. That
Yeah,
you've
exactly.
been
It's sort of in
KYC.
parallel. It's a requirement, and sort of one of the, obviously there's a lot of sort of centralization currently on the company itself, but we have a very, very good legal team, and what we're doing is setting up a new entity, which would be the counterparty in all future loans, and that entity would be controlled by true holders. So basically, there has to be a real world connection to vet borrowers and actually become a counterparty. That way, if there is a default, compensation can be pursued. But our goal is to sort of transfer that from the current system to one that's actually managed by true holders.
Exactly.
Gotcha. All right. I was just looking briefly if there were any questions in the audience. Just a reminder, you can raise your hand to ask a question if you've got anything. So I wanted to ask you guys about TUSD. Is that just or explain your centralized or your stable coin, TUSD, I suppose.
Yeah, so TUSD is a stablecoin that's backed 1-for-1 with US dollars. And currently it's the only stablecoin on the TrueFi platform, but that's actually changing very soon. That was just, for simplicity, we wanted to start TrueFi out with one asset. And TrueUSD is just, very trusted, audited stablecoin. But we're about to launch a multi-asset version of TrueFi, which is going to add several new assets. Hal, do you want to explain that?
I already mentioned before the idea of multi-asset. Yeah, one of the challenge about multiple assets is our long-term goal is to start allowing uncollateralized loans in Bitcoin and Ether, and eventually allow for any asset to be supported on TrueFi. So one of the challenges with that is establishing credit limits in US dollars doesn't really work when you're looking at something like Bitcoin, because the value of the funds borrowed can change in US dollars, even though the amount of Bitcoin borrowed is exactly the same. So sort of one of the challenges that we have to deal with is actually figuring out how to establish credit lines that are denominated in new currencies. And I don't think that anyone has ever really tried to do this, especially in the centralized finance world. Like, all debt is denominated in some kind of fiat currency. But what we want to do is find an effective way to denominate credit lines in other currencies.
Exactly. Yeah, so Magic
So
Turtle, I'd say the TrueUSD, we think it's one of the most trustworthy stablecoins out there. And when we originally created TrueUSD, Tether was the only competitor at the time. But today there are a bunch of different options, including USDC and DAI, and we don't see TrueFi as being at all tied to TrueUSD. And we want TrueFi ultimately to be agnostic as to which assets you're lending and borrowing, because it really is meant to be a protocol for collateral-free lending, not just a platform for lending one or two assets.
gotcha. So TUSD is almost like an asset out of convenience, to like a your own personal form of Tether or USDC that you were using as the base money. But
Exactly.
for the multi collateral credit system, um, so you're not valuing the credit lines denominated in currency? Is it like some other unit where like different cryptocurrencies have different conversion values and based on like volatility or like I have no idea like how
Well,
are you doing that?
in
Yeah.
this phase of multiple assets, we're only supporting stable coins, which streamlines. DAI in theory, we would be supporting only stablecoins, and DAI was the only one that's a little problematic in that it doesn't have, it's not always worth $1. But the volatility of DAI is so low that it's not a major concern for us.
Mhm.
Yeah, in the future, we do have an excellent credit team who's working on this issue right now, and I think a sort of good comparison for this, and it's not exactly the same, but it's similar, is how you could use some Bitcoin exchange or some centralized exchange, and you can actually denominate how much leverage you get based on how much Bitcoin you have as collateral. So for like margin trading or et cetera, the only difference is again that the value of your collateral changes, and collateralized lending has this down through a liquidation process. But because we are not requiring collateral to borrow something like Bitcoin, we have to sort of solve this problem as to how much Bitcoin someone can borrow and how that affects their credit on the platform.
That's right. So Magic Turtle, to be clear, the protocol, it's going to have one lending pool for each asset. An ETH pool, a Bitcoin pool, a USDC pool. Down the road, even a pool for sushi or for comp or for Aave. And um, and that pool, that pool is gonna be making loans that are denominated in that currency. So when we have a sushi pool, it's gonna be making loans denominated in sushi and lines of credit denominated in sushi to the various borrowers on the platform. And so that's not a problem because people put money into the pool in sushi and then people borrow money out using sushi, and you're earning an interest rate that's in sushi terms. And so if you might be earning 5% APY or 10% APY, whatever it is, that's going to be paid out directly in your sushi. And the protocol, isn't saying anything about whether sushi is going to go up or sushi is going to go down. The protocol's job is just to try to give you the best possible rate with the lowest possible risk in sushi denominated terms. The thing that is a little bit trickier for the protocol is how to manage the credit limits for all the borrowers. Because if someone has let's say Magic Turtle, let's say you got approved with a $2 million credit limit on the platform and you want to borrow out some sushi. Well, if you borrow out $1 million of sushi, but then tomorrow sushi 3X's, now you're above your credit limit. So are you technically in default? How do we make sure that we get some of that sushi back and so on? Those are some of the problems that we're actively working on now. But this is definitely where we're going as a protocol, is being able to support many assets and in the future, hopefully every asset.
Gotcha. So it's it takes vault like some like in terms of variables that you're looking at, like it's volatility and I don't know. I'm just trying to wrap my head around that bit of it, like how you would like mathematically design a system to be reacting to different volatile assets rather than just having like a dollar fiat credit limit, like you said. Um, it's a very interesting system that you guys are talking about.
Yeah, it's definitely not a trivial problem, and that's why we think that it hasn't been done yet, and why we're the first major protocol to be focusing on this. But I think it is really tackling some of the same problems that the over-collateralized protocols like Compound are tackling too, because they have to look at the volatility of a coin and then decide, okay, what collateral limit do we want to put on something like sushi or on something like uni, if we're going to list that asset, because a lot of these assets, even Bitcoin or Ethereum, could go up or down, a huge multiple very quickly if there really was a major bull run or a major crash. And so that's something that every protocol that's doing lending has to deal with, regardless of whether you take collateral or don't.
Awesome. And I have been told to ask you guys about double yield.
Whoa. Did somebody say double yield?
About triple
Al?
yield.
What do you know?
Yeah,
whispered that.
What do you have a double, triple, quadruple yield?
so one of the great things about the new version of Sushi Swap is the smart contracts team implemented the ability to add basically a hook, which when someone claims sushi is called, and you can execute some piece of code when people are claiming their sushi.
Wow, now, how much sushi do they pay you to say that?
Well, I am a farmer, so I don't
Okay,
need
me
to
too,
be
me too.
directly paid. No, so what we've done is we are matching starting next week or pending multi-sig approval and time lock execution. We're matching sushi farming, sushi rewards claimed in the True ETH farm, 106 times the number of sushi. So basically, the current we sort of looked at the difference between like Uniswap and SushiSwap, and kind of decided as a team and as a community that SushiSwap would be a better place to put our to actually have most of our DEX liquidity. Just because we've seen great engagement from the community, we believe in the project, and having this kind of rewarder that's actually built in directly into the farm that requires no additional work other than just claiming your sushi. We thought we would move all of our incentives that were going to Uniswap liquidity providers and move that to SushiSwap. And an even cooler
right.
piece of this project is there's another protocol called ArcX. What they're doing is building what's called a DeFi passport. So for certain wallets, you'll be able to claim this passport based on your wallet history. You could think of it kind of like a degen score, but less degen and more for looking at how responsible people's wallets are. And so
Yeah.
next month, even after we launch the double incentives, we're actually going to work with ArcX to check the wallet that's claiming sushi and give an ArcX reward. So by next month, people who are farming in this farm will actually have the ability to claim rewards in 3 different tokens, just for providing liquidity and depositing the tokens into the Master Chef contract.
Right.
Wait,
And
yeah,
I think that
that last bit tripped me up. So I'm sorry, Raphael, but you said
go ahead, go ahead.
you said sorry. Now it's slipping away. The token you said a third token.
Yep. Triple
What?
yield farming. You heard him right.
But what was the third token? I didn't.
Called ArcX. So ArcX is another lending platform that we've been working with, and what they're doing
So it's sort of like
is
a partner.
yes. And the great thing about the SushiSwap rewarder contract is that you can actually stack multiple rewards. So we'll sort of be looking out for other projects in addition to ArcX to try to maximize the yield that people can get through the SushiSwap farm.
You guys are nutty.
Right. I think this is very exciting, and I think this is part of what's powerful about DeFi is that, we are building all the entire financial stack up, and every Lego piece that gets added on top is excited to incentivize people to help grow it and use it, because ultimately, if TrueFi does end up being a multi-billion-dollar protocol for collateral-free lending, that's going to be worth a huge amount to the world, a huge amount to our communities, and yield farming is just a great way to share that with all of the users that are making that successful. So we're seeing more and more of this across DeFi, and I think that the multi-asset farming that SushiSwap now supports is a really powerful way for projects to partner. So we're starting right now with one farm in conjunction with SushiSwap, but I'd like to see 2, 3, 4 down the road, because we've got a whole bunch of different assets on our platform, especially given that we're adding USDC, Tether, and DAI support. I could see having, a TF USDC versus USDC pool, potentially a TF USDC versus TRU pool, things involving sushi. So there's a lot of potential farms that we could consider to help grow both of our protocols together.
Awesome. And on the sort of because you mentioned that like uncollateralized lending is a larger market than collateralized lending, which obviously makes sense. But from the institutional perspective, are you guys seeing a lot of interest from obviously crypto native businesses, but also potentially like smaller businesses that are looking to get sort of like startup type loans and things like that of that nature?
Well, I think that there would be a lot of interest from those types of businesses, but it's not something that we're pursuing right now, because when we look at the rates that are being offered by some of the firms we're working with, like Alameda, Nibio, and so on, these are oftentimes 12, 14, 16%. And most businesses globally are not able to offer those kind of rates with also the kind of the level of trust that someone like an Alameda can offer, with the very massive size of their balance sheet. And I think part of the reason for that is that today, crypto is booming. There's a huge amount going on here. A huge amount of money is moving around. There's lots of need for liquidity providers and other things that these funds are doing, but there's relatively low access to credit. That's the key thing. There's way more access to credit for more traditional non-crypto businesses. And so I think part of what TrueFi is benefiting from is this gap where crypto firms are oftentimes, very legitimate, very profitable, taking, very reasonable measured risks with their money, but are still, when they go to a conventional bank, if they go to JP Morgan and ask to take out a $10 million line of credit, they get laughed out the door just because it's crypto, and so many conventional firms just don't feel comfortable with it yet.
Yeah, that makes a lot of sense. They're like definitely like the crypto native firms and businesses dealing with large amounts of crypto on their balance sheet are the people that are getting like screwed the most in the traditional finance world.
Exactly.
It's sort of messed up.
I think everyone feels that, just try, even opening up a bank account, much less getting a loan, can be very difficult even today for a lot of crypto companies. And everyone knows like the three banks in the US that do, most of the business with crypto, right? Like Silvergate, Prime Trust, and the Signature. And those are the three big names. And the reason is because almost everyone else just refuses to work with crypto because they don't understand it. They don't feel comfortable with it. And it makes sense, from their perspective, they've got risk and compliance teams that are trying to keep them safe. And so they'd rather play it safe and not get involved in something until it's more mature and more established. But ultimately, I think that's for all of us here in crypto and here in DeFi, that's really our advantage and their loss in some sense.
Yeah, I just wanted to remind everybody this is an open AMA, so if you have a question, feel free to raise your hand and I'll try to bring you up.
Yeah, come on, folks, make it fun. Throw in some questions. All right, I see a hand. Daft
Oh, yeah,
Leet.
draft. Here we go, bringing him up. Sent an invite. You should be able to click a button somewhere. Daft. Yeah, there you go.
Hi. I got cut off at the triple and quadruple yield farming. Could you go over that again, please?
Oh, yeah.
So we'll actually, I believe, be one of the first protocols to be matching yield, matching the yield in sushi tokens earned with true tokens. So in SushiSwap v2, the smart contracts team added the ability to actually reward SushiSwap farmers with any ERC20 token. And so you're starting out by being the first token to actually do this, where if you farm sushi, you'll also be farming true automatically. When you claim sushi, you'll also claim true. And as we partner with more protocols, we want to try to stack multiple token incentives natively within the SushiSwap platform. So the first collaboration after we launch the initial true farm will be with ArcX, who I can drop in one of the general channels a link to their site. But they're working on a DeFi passport, which if you can acquire the passport, they'll match some of their token rewards to the sushi rewards as well. So you could be able to farm sushi, true, and ArcX governance tokens.
Exactly. Does that make sense, Daft?
Yeah, that's actually pretty cool.
And
This will be on the true ETH liquidity pair, just to clarify.
Oh, okay.
Right. I think True ETH is a great place for us to start together. But Hal, you know what I think would be the ultimate sushi swap farm for us to make? If we do TF to USD versus STK True and make a sushi swap farm for those two assets. So TF to USD, that's TrueFi to USD. That's if you lend for USD to the protocol, you get TF to USD. That's like your LP token with our protocol. And then STK True, that's stake True. So you take your True, you stake it with the protocol, you get STK True in exchange, right? So we could have a farm on SushiSwap that's between those two assets. And then, it's a little bit higher risk because your True USD is being lent out, of course, and your TRU is being staked, and both of those have some risk associated with them. But then, you could be earning TRU from the lending, you can be earning an interest rate from the lending, you can be earning both protocol fees from staking and additional True from staking, and you can be farming sushi and you can be farming ArcX all at the same time. So you are exposed to some potential losses there, and you're exposed to some IL on the sushi swap side, of course. So it's definitely not going to be without risk, but I think that could be one of the most insane farms we could possibly build.
We love insane farming.
There you go.
All
I
right,
kinda like
awesome.
that, yeah.
Thank you,
All right,
Daft.
thanks.
All right, well, any other questions from the audience, please raise your hand. We're here. Magic Turtle, whatever you want to chat about next, let us know.
All right, let's talk about L2s.
Oh, all right.
Have you guys thought about any different L2s, or has it? I mean, like from one perspective, I feel like it might not even be that interesting to you guys because you're working with institutional people anyways. Like they don't care about the gas they're spending to take out their credit line, or maybe they do. I don't know. What's been your experience?
For
How are
layer
your thoughts?
twos, like we kind of see it currently as a big trade-off where we're solving some very difficult problems, and currently it's more important to solve those problems than it is to scale. But I'm a very big Optimism fan, and I've been following that team since they were Plasma, and as sort of an Ethereum geek, I would heavily lean towards uh, supporting some kind of optimism-based solution uh, actually not necessarily for the borrowers, but for the lenders, because the cost to deposit into our lending pools are extremely high, as it is with Curve or Aave. We definitely want to, probably in the next 6 to 8 months, come up with a good solution to allow people to acquire LP tokens at a cheap price. And I think that with Optimism coming out, that and also Uniswap v3, we might be able to find a good solution which allows people to, rather than directly deposit into the lending pool, acquire LP tokens at a fair price with really low gas fees. Like with Uniswap v3, and hopefully soon SushiSwap v3, if SushiSwap decides to support similar features, we can use liquidity targeting. So you can target a specific range of price to provide liquidity. And I think that Uniswap v3 deployed on Optimism could offer us a very good solution in the Ethereum. I think long term, it could potentially make sense to move entirely to Optimism, especially for a lot of protocols. And I think currently that's our main path, would be as people migrate to Optimism, we sort of follow suit and provide the ability to directly lend on Optimism. This is definitely deep in our roadmap.
Go ahead.
It's definitely deep in the roadmap.
That's going to be a ways
so no
out.
short-term plans other than to simply support tokens on layer 2. So an Optimism bridge. We've gotten support from Binance Smart Chain as well. Yeah, that's Yeah, and I think like what Magic Turtle is saying is kind of correct, where the borrowers don't really care about. They're willing to pay several $100s to borrow $10 million. They don't really care about scaling. I think for retail users, however, scaling will become increasingly important, not only for TrueFi, but also for every other DeFi protocol.
Agreed. Yeah. Hal, what are your thoughts on Matic, which has now been renamed to Polygon? I've been hearing a lot about it lately. You still think Optimism is better?
I mean, I think they're different. Like Polygon's best application that I've seen is gambling on Decentraland, which is a pretty smooth experience. And I know that
Yeah.
Decentraland has been opening a bunch of casinos there. I mean, as far as security goes, obviously, Matic is a separate chain, so it has sort of a different set of risk for on a larger scale. Whereas Optimism is sort of a Ethereum native scaling solution. It's not a separate chain, and you have finality within 7 days. Whereas Matic definitely trades off a certain centralization risks for faster withdrawal times.
Matic
Yeah.
does.
Go
I
ahead.
thought Matic had
Oh.
withdraw duration of 7 days.
Do
So
they
I think
still?
Matic has, they're using Plasma, but they also have like I think it's a proof of authority chain. I'm not sure, but I know that they have like the ability to withdraw fast withdrawals and then also use Plasma withdrawals.
Okay, I see. It's like
like
2 separate types.
I'm just very
Hal,
bullish on ZK rollups in general. I'm always going to be biased towards Optimism.
One thing that I could see us doing is just designing an easy way for people to use an L2 to put money in and out of TrueFi as an LP, because that's where most of our DeFi farmers and more consumer usage is. And then on the lending side, where it's more institutionals, that could just stick on the L1, and it might be a lot simpler that way. And as you mentioned, the easy way to get in and out of the protocol, that could potentially start with just a Uniswap or something similar.
Awesome.
Oh,
And
you scared the hell out of me, man. Sorry about that. How you doing today?
I don't know
I'm
if I'm
busy.
allowed to talk about Uniswap here. I might get on trouble later.
no, it's fine. You can talk about
Someone
Uniswap.
came to my door.
Okay.
Sorry. Hung
That's
up
right.
like a flyer on my door.
No worries. Yeah. I did have a random question for you guys. So for like Optimism versus Polygon Matic, do you still call both of them L2s? Do you call them side chains? Because like I use these interchangeably, and a lot of times I think it confuses people.
Yeah,
Hal,
well,
I'm gonna defer to you.
Polygon has their own chain, whereas Optimism does not. So I would say both layer 2 technically, but Polygon is a separate blockchain, right? And Optimism is a solution built on top of Ethereum using smart contracts.
Gotcha. Okay.
Cool.
Okay. Also, so we're getting close to the end of the AMA. I wanted to see if anybody had any further questions from the audience.
Come on, folks. You must have some questions. We can't be that boring.
I think I see Odin raising his hand. Odin,
All right.
your hand is raised. Okay, I tried to bully him into raising his hand, but it didn't work.
Good try.
It's
All
great
right.
to have such a
Well,
large audience today, 25 people. That's very good.
yeah.
If you want to learn more about TrueFi, please join our Discord. I posted it in the general channel. I'm not going to keep spamming it, but it's up there, a couple chats up.
No, please do spam it. Most definitely.
Okay. Yeah, I mean, it's Discord. Drop that link again. It's
All
just
right, and
bit.ly/chat TrueFi.
gotcha. And the website to find out more about TrueFi is truefi.io, correct?
Exactly.
Yes.
And you can also use the protocol directly there. I mean, everything that we're talking about is completely live. The platform has done over $100 million in loans so far. So this is the real deal, and it's had 0 defaults. And lots of people are, making a great APY farming it. So if any of the folks here don't already have some of their money in TrueFi, you might really consider it. Farms are still pretty good.
Might want to load up before that triple yield craziness kicks off.
Exactly. This is the time. Get familiar with it right now.
I also
Awesome.
dropped the ETH True liquidity pair that will be incentivizing. And pending multi-sig approval, it should be live next week. If anyone is in this call is on the sushi multi-sig, please feel free to try to expedite this, as we would be one of the first protocols to actually offer this kind of thing. So we're really anxious to get it live.
Yep. Our community has been waiting for this for a while. Very, very excited about it.
Any
All
last
right.
questions
Oh yeah, that's
before
good.
we go?
If there's any last questions, feel free to raise your hand. Don't be shy.
Okay, well.
Okay. Well, thank you both. Thank you, Hal, and thank you, Raphael, for coming out and joining the sushi community and explaining TrueFi and answering all our questions. We really appreciate your guys' time, and yeah, thank you for all you guys are doing.
Thanks for having us on, Magic Turtle. It's been really good, and I hope that all the folks here will come and join us. We'll see you in Discord. Please go ahead and check out the protocol. I hope you'll enjoy using it. And I think both TrueFi and SushiSwap are building some really cool stuff together for DeFi, and I think there's a lot more that we can do in partnership. I'm excited for that.
Awesome. Thank you, guys.